Hi, Steve. Thank you for coming on to the show.
Yeah, and thanks for having me, Andy.
I think this is a long overdue episode. We talk a lot on the show about buying property, about doing refurbishments, tips to manage tenants and manage properties. And I think, in fairness, we've overlooked the importance of some key things that we as landlords and investors need to think about. And insurance is definitely one of them. I know as a portfolio landlord, um, this is something that every year I need to look at and be thinking about renewing. But I have to admit that it's one of the things that I've often seen as just a bit of a tick box exercise. I probably haven't given it the time and attention and thought that it really needs, and I probably don't understand this as much as I need to. So I was really keen to get you on the show today, Steve, to kind of fill in some of the gaps to really help us understand what we need, what's going on, and actually is perhaps what we can expect over the next couple of years with insurance, because we're in a sort of fairly turbulent economy at the minute. So,
Yeah,
Steve, to get us started, this is a question I see asked regularly in the HMO community. Um, do we need specific insurance for HMO properties? Is this a specific policy from specific providers that we need?
I think it's actually slightly different in terms of what you require. What you'll find is certain insurance companies, the moment you mention housing multiple occupation, HMO, they just don't want to insure it. So the first question is when you obviously call to get a quote is to make sure you let the company that you're calling know that it's a housing multiple occupation. At Hamilton Fraser, Total Landlord Insurance, basically our policy is designed for HMOs, so it's no issues for us whatsoever. And all we'll state in the policy wording is that you must make sure that any regulation, or if the local area needs a license, or it needs to be, fire regulations over a certain amount of floors, as long as you follow all that, then our policy will cover it. But as I said, I would probably say there's quite a few insurers, for whatever reason, and I know a couple of the reasons which I can go into, don't like houses in multiple occupation.
Well, I mean, I'm assuming that specialist policy, some lenders don't want to know because they consider there to be perhaps more risk. Maybe they're slightly more complicated in nature to run and operate these properties. Is that why? And is that why insurance costs more for HMOs than, let's say, the same size property but with just a family in?
Yeah, I think one of the things with a house of multiple occupation, when you've got people having different rooms, if there's a water leak coming from one and the tenant that's below in the bedroom or whatever doesn't notice it, or he's out or he's away, so sometimes leaks and stuff like that don't get picked up as quickly as what they would do in a normal house, that you've got free access to get to. Um, Again, with a house multiple occupation, one of the stipulations with a lot of insurance policies is that there's a designated cooking area. So there's a communal kitchen and stuff like that. Again, if there's cooking elsewhere, that could be an issue from a fire perspective, and insurance companies would deem that as a high risk and wouldn't want it. And I think where you've got more people in the property, if people are having more showers, more baths, and are not making sure that they're, closing the door and things like that, you are more likely to have a lot more water-related incidents. Again, when you've got student properties, which are house of multiple occupation, there's always that worry about more damage. From personal experience, since they introduced, and it was a good few years ago now, where nearly every time a student rents, they have to get a guarantor. I personally don't see any difference in a student property to a working family, or someone claiming benefits. Because at the end of the day, there's always somebody to go back after the money. So generally speaking, people will treat the property with a little bit more care, knowing in a lot of cases, mummy or daddy might be footing the bill if you cause any damage. But I think a lot of it is due to the fact there is more people in a property using more facilities, and may not be as quick as reporting a problem.
So it sounds really like, for all the reasons why, um, for example, or the cost of having your HMO managed is more than to have a single let managed is the case. There's more involved, there are more moving parts, there's more risk, there's more people to deal with, there's a greater chance of things going wrong, and ultimately when it comes to insurance, that's why the policies are going to look a little bit different, and that's ultimately why they're going to be a bit more expensive, and why some lenders are just not going to be interested. So that's useful to know, and I think immediately now we can understand that actually there are people out there like you guys, which is why we're working with you, that do
Yeah.
understand this stuff, that do understand what we need in HMOs, and it's good to know that we're talking to the right insurers as well.
Yeah.
Um, I've got this might sound like a really basic question, but it's something that I've never really understood, and that is, how is the insurance and the policy we pay for actually calculated? It seems to me, and I realised this in retrospect once actually. I was probably a bit too. What's the word? Maybe didn't give enough time and attention to my reinstatement values of some of my properties,
Yeah.
and I at one point realised actually that it does seem to change the insurance figure quite substantially, and maybe I should have been thinking a lot more closely about it, and it made me think about whether or not in some areas I'd just not been putting enough in, and therefore I'd been keeping my insurance policies low, but actually was having a problem. Now I'm sure we'll come on to under the potential for underinsurance, but
Yeah.
just help us, Steve, understand, how is insurance calculated? What are we actually paying for? How are the insurance providers, the people who are underwriting the policies, how are they actually determining what our policy is going to look like?
Yeah, I mean, first of all, they'll look at the postcode of a property, and that there's quite a lot of factors in that. But obviously, a couple of the key ones would be like, is it an area that's had previous subsidence? Flooding in the last sort of couple of years has become a very hot topic, and insurers now got a lot more data than they ever had. So we're finding a lot more properties fall within a floodplain or a flood area. So as many as sort of 14-15% of properties could be under that criteria. And then you've got to look at things like crime in the local area. So has there been thefts? And then the type of people that you put in the property. Now, again, our stipulation of our particular policy, we're just interested in it being on a short hold tenancy agreement, which gives you, some power. I appreciate the Section 21 may be changing, but still will give you power to, evict tenants under the right circumstances if need be. So we don't really penalise whether someone is a working professional claiming benefits or is a student, purely because the assured short hold tenancy will allow you to deal with that person in the event of something going wrong. And as I said to you before, a lot more people now are getting people to be a guarantor as well. So that's something that's worth looking into from a landlord's point of view. But also, one of the things we are seeing a lot more, estate agents, letting agents have always done it, but not necessarily a landlord that's dealing direct, is getting tenant referencing. Because a lot of policies, if you haven't got a tenant reference, for example, if you're lucky enough to have a policy that includes malicious damage by the tenants, you will need to make sure a reference is completed and passed by the by the actual tenant.
So that's interesting, and I didn't know that actually. So with that example there, then let's say guarantors or having specific clauses in the tenancy agreement. Is that the sort of thing that exists in the small print that maybe we as a property owner aren't paying that much attention to, or if I'm honest, Steve, any attention to often when we're looking at these policies? Is that something we need to be really thinking, okay, this might exist, I need to ask the question about this and make sure that if it is there, I'm doing it?
Yeah, I think the most important thing is most companies that you'll ring up will ask what type of agreement you've got in place. And I think most landlords know that if it's an assured short hold tenancy, it will tick 99.9% of the boxes that the insurance company require. However, if you are handing over control to someone else, or you're allowing, and there's a lot of it in the news at the moment, not all good press unfortunately, where someone like me who's not a letting agent, not a property professional in that area. Obviously, insurance is my bag. But I say to you, Andy, I'll look after 4 of your properties and I guarantee you a rent. And then I look after the properties and obviously put a markup on what it should be. That then means you haven't got control of who's going into your property, which makes it harder in the eviction process. So again, insurance companies, a lot of them won't do anything to do with subletting. So I do think it's important that when you're being asked the questions, you're answering them truthfully. And if there is anything that you are thinking, actually, I do this at my property or I do that at my property, then make sure that you say that on the quotation. But standard things like who you let it to will be on the majority of quotations that you get. If you get it online, there may be assumptions in the small print that say the quote is subject to having no claims, no CCJs, no convictions, all the tenants are on a short hold tenancy. So it's important that when you're just clicking these buttons to get onto the next stage, that you are reading them. Because you are right, a lot of people just want to see the price and then forget about all the assumptions. I mean, when we do quotes over the phone, we have to go through everything anyway. But online, because you are, you could say it's a bit of buyer beware, but you are making an informed decision on the information that's in front of you. You haven't got somebody to ask you the questions. So I do think it is important that the amount of people that get caught out online because they're not reading the full question and just ticking to get to the next part of a quotation.
I think that's one of the things that over the years I've realised, certainly on a very sort of personal level, I prefer to do is actually pick up the phone and speak to you guys about it, because you ask me the questions, and I do sometimes worry whether, and I know that I can often skip stuff. I worry I've missed something, and actually I definitely feel more comfortable in just picking up the phone, having a conversation with you guys, and going through that process with you. You brought up a couple of interesting points there, and I want to ask you about the sort of maybe a couple of scenarios where we might have to claim. So let's say, Steve, it was a shower leak, or I don't know, like a weeping tap at the back of a sink, and it blew, and we had to pull up the bathroom floor. Maybe the ceiling came down and damaged some tenants' possessions in the bedroom. It's a very realistic scenario. Something that happens to us. I would say probably every 6 months we have something like that happens. Maybe not quite as bad, but what if we had to claim? What, as a landlord, as a property owner, what are our obligations? And will you guys ask for things like inspection records? But I'm asking this because I have been asked for this stuff before and was surprised to be asked for it. Unfortunately, we had it, but I worry that some people in our community, some of our listeners, they inspect their HMOs, but maybe they don't document it. Is this the sort of thing that actually is important if we're ever going to have to claim? Should we be documenting things like inspections, or am I overthinking it?
No, I think you're 100% right. I think in the event of a claim and things happen and you need to prove that something didn't happen or it's not been ongoing for a year, I do think it's important that you jot down, note the inspection done, clarify that there was nothing wrong at the property and you've inspected all the rooms. What you will find is, especially on malicious damage that could have been caused or would have been caused by the tenant, you do need to inspect that sort of every 3 months, the property. And if you didn't have the inspections, then that would basically jeopardise your malicious damage claim. And again, as I said earlier, you'd also need a tenant reference if you want the malicious damage cover. And as I said, there's not a lot of companies out there that give malicious damage caused by the tenants, but those that do generally will want to have proof it's been inspected on a regular basis and there's a tenant reference. And one of the main reasons why it's inspected on a regular basis isn't your normal, when I say run-of-the-mill malicious damage, I'm on about, just someone having a disagreement with you and smashing the place up. Still going to be expensive to repair, but generally you can get tradespeople in to do it. What you'll find is, and hopefully not so much in a house in multiple occupation, but you never know, is more going to be if someone's trying to grow an illegal substance. And they use certain walls or the loft hatch or the ceiling space to drill holes to run stuff, or go into the electrics and stuff like that. And if you let them get on with it, within sort of 3 to 6 months, they could have completely ruined a property, got their, their harvest of the drugs, and they've moved on, and they've left you with considerable amount of damage. So if landlords are not inspecting the properties to make sure that type of thing that is ongoing is happening, then insurance policies won't pay out.
I know so many people, Steve, that don't quite, honestly, I know lots of landlords in the industry. Some of them, they live abroad for half the year and they don't inspect their properties. They don't have a property manager. They manage them themselves.
Yeah.
But to some people, the extent of that is actually collecting rent and things like that, as
Yeah.
opposed to actually physically getting in and checking the property. So I think you've highlighted a really important point here, which is actually, if you're paying for insurance, unless you're actually doing this stuff and actually monitoring and inspecting and documenting, that it's going to be, in some cases, kind of pointless even having the policy in the first place. Because the example I can give you is we had an issue with the front wall. A big coping stone came off the wall. Somehow it caused some very expensive damage, and we had to put a claim in. And the insurance company immediately came back and they asked for evidence of sort of inspections from the last 12 months, in fact.
Yeah.
Because we were sort of saying, look, actually, it was kind of, I think, storm damage or something like that. It was something that had just happened. It wasn't something that had happened over a period of time. We certainly hadn't seen any evidence of it, and it was really fortunate that we did keep that information. And actually, after that happened, I actually made a change to our own inspection policy, and I separated an area in our form for my team, where they could note specifically things inside but also outside of the property, whereas previously it was all in one. And the tendency was that staff and team members, or myself as a landlord, we wouldn't necessarily say that we checked something if it was fine, but actually I think there was value in saying, have checked all the outside, gutters, walls, all look okay. So it's just a change that I made, and I think we were successful in the end. In the end with that, but it could have been a different story if we hadn't have had those records.
Yeah, and I think one of the things, and again, you get different percentage of landlords that do this. Letting agents definitely do, because obviously you're trusting them with your property. But inventories, people walking around with an iPad, literally just going like that around the room to say this is that, this got that. There's no damage to the skirting boards. And even as you just said, also doing that at the outside of the house as well. And that inventory obviously could help you. It will help you in the event of a dispute to do with not so much insurance, but like the wear and tear or the condition of a property with the deposit deductions. So that's a winner there. But it's also a double winner, because you can use it in the event, as you just said, in the event of a claim, and they say, right, we think that water leak's been going on for the last X amount, and you've got an inventory where you've gone around the rooms and you've clearly shown that wasn't there previously. Straight away, you're not going to get that, angst type of situation with an insurance company saying, prove it. You saying, well, how do I prove it? So things like the inventory for me are a really, really good thing, but they do work for not just the deposit side of it, but also from the insurance side of it. And I think when you show someone and you give them a copy, of the recordings that you've done, when it comes to deducting deposit or then having to make a claim, you've got the evidence on both sides as to why you should do it. You also mentioned about leaks and damage. I think it's worth bearing in mind that as a landlord, it's not your responsibility for the tenants, whether it be clothing, whether that be laptops, So I do think it's also important that when you're showing a tenant around and setting up a short hold tenancy, that you make them aware that it's in their best interest to take out their own insurance policy for their own belongings, because a water damage, where a pipe has burst or it's frozen, or as you said, it's leaked from a shower, that's unforeseen. That's what insurance is there for. So it will pay for the damage, but obviously the tenant's contents, you have no insurable interest as a landlord. So if they have damage to their belongings, they need to make sure they've got their own insurance to cover it. Now, the good news is a lot of tenants will then come back and say, well, I haven't got contents insurance, it's on you. Under our landlord's policies, and to be fair, majority of landlord's policies, you'll have a thing called public and property owners liability cover. So if a tenant then obviously come to you, you could say, well, hold on a minute, I'm not responsible. If they then want to pursue it through the insurance, we can then get the insurance company to say, the landlord's done nothing wrong, no insurable interest, you should have had insurance, and bat it back that way. So at least then it cause you to have if they don't accept your findings, you can say, well, you can put a claim in, but all we're going to do is give it to our insurance company who will defend you, and unfortunately politely say to them, you need to go and do it yourself, sort of thing.
It's a really useful point to highlight. We actually, in our welcome pack for tenants, Steve, we tell them in there about the content insurance policy, that it's not included in their tenancy agreement, and that we recommend that they do go and get it themselves. But we have been asked a number of times by tenants who've unfortunately been the victim of some damage in the house, for whatever reason, for us to pay for stuff, and we've almost always sort of gone back and said, look, actually, no, this doesn't fall within our remit. You should have had the insurance that we told you to get. But again, we've been asked to supply certain data and certain information about our internal policies and procedures when tenants have made some claims as well, when they have done it. And again, that's been successful for them when we have done it. But I think that's important. And I'm not sure technically or legally where we lie, but I certainly feel like there is a responsibility to do all of that stuff as landlords, to make sure that not only we're ticking the boxes for our own policy, but also if in the event something happened for our tenants and they need to make a large claim, then actually we can at least assist with them where we can. I suppose I've got a concern, actually, Steve. I've got a concern that a number of people in our wider community, a lot of landlords, they've maybe haven't got some of the things that they should have got. So, for example, they haven't got the planning permission they need for the 7th room, but they're letting it. They haven't got the HMO license for the 7th person or the 6th person, and they've got it for 5, and they've got 6 in there. Maybe they didn't get the building regs to sign off the attic room, or these sorts of things. I think I do come across from time to time. It surprises me actually how often. And the question I suppose I've got for you is, in the scenario where this is the case, would this sort of thing actually void an insurance policy on someone's house? And I guess my default position as someone who manages lots of tenants and lots of rooms and feels quite a strong kind of moral and kind of sort of legal responsibility to protect tenants. Let's say in the event of something pretty terrible like a fire or someone getting hurt, making sure that all these bits are in line as well. Would there be an issue for a landlord if they had to make a claim and they didn't have something like the right certificate in place, or they weren't using the house in the right way?
Yeah, I think worst case scenario, the whole policy would be immediately voided. Now, there may be some scenarios where it wouldn't be voided, but on the flip side, the insurer wouldn't pay out the claim. So the end scenario is going to be the same. So, with whether it's like a fire regulation, for example, if you have a settee in the property, it's got to make sure that it's fire resistant to a certain level and things like that. And if if you're going to put furniture in, it's got to be up to that standard. As you said, if a local authority has a license up to so many people and it has to be signed off and it's classed as a HMO, if you've not done that, then that's going to affect a claim and potentially, obviously, then the policy could be voided. So I think anything to do with legislation, and I appreciate, landlords have got a lot of legislation. If it is something that could materially affect the property, then unfortunately, yes, the insurance companies, at the very worst, will void it. But from your point of view, if they don't pay out a claim, that's just as bad as voiding the policy anyway. So I do think landlords need to look at what they're doing. I mean, houses in multiple occupation are a specialist area, and if you're getting into it, you know, me personally, I think, you know, returns are good, but you need to make sure that you have somebody that understands it, even if that's, you know, initially using a letting agent or a managing agent that specialise in it while you get up to speed. But it's not something that you just want to do thinking, actually, I can get, you know, 5-6 people in my property, earn an extra, you know, £1,000 a month against, say, a family being in it, because if you've not followed the regulation, it's going to cost you a lot more in the long run. And if you've breached something, I suppose, like fire regulation, it's not just the insurance that won't pay out. You could potentially be facing more serious, you know, with the law, you know, which, you know, could result in a lot bigger fines, or in certain cases, if you've jeopardised someone's safety, that could obviously be a criminal act. So
Yeah.
I think you're right. I think it is important that people, if they're getting into, you know, buy-to-let in general, but especially with HMOs, that they make sure they're following any local authorities' recommendations, and to get the licence, they make sure they put it in place.
Well, I think you highlight really, Steve, that the fact that, you know, the sector is professionalising and it is becoming more challenging for landlords to keep up. But one way or another, they need to give the properties to somebody else to be able to do that, or they
Yeah,
need to be able to do it themselves. And I think there's quite a commitment there, and I think that this piece around insurance that we're discussing now is, I suppose, the superficial layer to some of it. But actually, I think if you do and just make sure that you're doing what's required from an insurance point of view, you're probably actually, by virtue, you'll be doing
yeah,
everything else as well.
yeah,
Um, I've got some questions around underinsurance. This is something actually we've spoken about before,
yeah.
and I know it's a bit of a concern of yours, and I think there's some data that you've got to share with us about so how prevalent this could be and how big an issue this could be. So, talk to us about underinsurance, Steve. What is it, and you know, what do we need to be aware of as landlords?
I think one of the questions you asked earlier is obviously when we're working out an insurance premium, and we've got, you know, different people, different types of property, but one of the main points on a premium is how much you insure the property for. So it's nothing to do with market value. It's purely to do with the bricks and mortar, the solicitor's fees, obviously foundations if they need to be done again. And then obviously if you've done any modifications to the property. So that could be that you converted it to a HMO. It could be that you've put an extension on it. So it's important that when you come to get the insurance, you insure it for the true reinstatement cost of the property. Now, the thing is with that, over the years, some people might have bought property with cash, so they've never had a professional look at the property. People might have bought a property 10, 15 years ago and did it on the rebuild based on the mortgage valuation at that particular time. But generally after 5 years, even with insurance companies trying to estimate what the labour material is going to be, the rebuilding cost can quite easily spiral out of control against obviously what you've got it insured for. So one company called Rebuild Cost Assessment, they did some work with some insurance companies on claims that got paid out. And these are generally the larger claims, but they're the ones that are going to financially impact you the most. And they reckon as much as 8 out of 10 properties were underinsured, and of that, probably at least by 30%, some as much as 50%. So I'll give you an example. You insure a property for 100,000 and the rebuild should be 200,000. So basically, you know, you're 50% underinsured in what you've paid for in the insurance and everything else. In the event of a total loss claim, the most that you'll get paid out is £50,000. So they won't pay you out what you insured it for, because you've insured it for half of what it was worth. In the event of a claim, they'll apply a thing called average, and the most you'll get paid out is 50,000. So you hit twice. You're hit by only getting half of what you've insured it for, but if the true rebuild value is 200,000, you've got to find an extra £150,000 to put that property back to where it belonged.
So this would be devastating. And if you had a mortgage, Steve, this is the sort of scenario that basically could ruin you. Is it? That's how bad it could be.
Yeah, I mean, definitely. I mean, I think it's important that, I mean, it's easier said than done because it's not my money, but ideally you want to try and get a valuation, a rebuild valuation, probably once every 5 years to cover yourself. And then for the next 5 years, when insurance companies index link the properties, and when I say index link, they just basically say the average cost of inflation, material, labour, everything, maybe at 4%, and they'll add that on, and that'll obviously top it up over a 5-year period. But that's only an estimation. It's still on the landlord to make sure he's got the correct value. So, give you an example, and this also affects premiums. We are now seeing, probably for the first time, I've been in insurance over 30 years. This is the first time that I've seen index linking go above 10%. And I reckon by the end of the year, if nothing changes with labour, with material, cost and everything else, we could even see index linking getting up to 20%. And then people say to me, well, how can that be when inflation is a lot less, but you have to weigh everything else up, obtaining the material, the cost of the material. We've spoken before, in the last couple of years, 1.5 million, they reckon, manual labour people. And when I say manual labour, I'm on about professional labour, whether that be plasterers, heating engineers, bricklayers. Those people that were in the UK working are no longer here, so that's pushing prices up. And you are right, that could really, in the event of something happening, absolutely crucify you. Now, we can't, as an insurance company, we're not surveyors, so I can't say to you, your 3-bed semi based in London or Manchester or Birmingham should be X amount. Unfortunately, that is on the landlord. Now, if you are clued up enough to know your square footage of your property, then you obviously put the levels and the bedrooms in. You can go to the Building Cost Information Service website and calculate a figure from that. But again, in the event of a claim, if you've calculated it on the wrong square footage, an insurance company isn't going to stand by that. The obvious one is the Royal Institute of Chartered Surveyors, but that's probably going to cost you, I don't know, because they'll do an inspection at the property, go through it. That could probably cost you anything upwards of £750 plus VAT. And as I said, I mentioned it earlier, there's a company called rebuildcostassessment.com, and that's literally their website as well. They will do desktop assessments of a property and probably charge under £200, which is a good company to go to, but you still need to make sure that your insurance company will accept their desktop valuation. Now, the companies we do, because we've had dialogue, will accept them because they are Royal Institute Chartered Surveyors that sit behind that and have done many properties in many areas. But again, if they're doing a desktop assessment, they then need to find out from you, is that property a house in multiple occupation? What amendments have you done to the property, so they can incorporate that within the report to make sure everything's covered? Because it's no different if you put an extension on a property, that's going to up the rebuilding value of the property. And you'll be surprised how many people that we come across that will put an extension on a property and would not think to speak to the insurance company to say, I've just put a £50,000 extension on. Well, that's the cost. So that's going to up your rebuild by £50,000. I'm not on about obviously like the stuff you put in it, but just, if you've got glass, the bricks, the flooring, the walls, the plaster, everything that goes with it, that needs to be incorporated in with the valuation. But unfortunately, as I said, with the way things have gone, we are seeing on the larger losses, more and more people are underinsured, and it's in your best interest to at least do one of them three to give you a fighting chance. Two of them, I think an insurance company will back you. The doing it yourself is a bit more risky, but at least then it gives you an idea, You know, if you do that and you're £40,000 less than what you've currently got, at least by increasing it by that, it puts you probably nearer to where you should be.
So just for our listeners, then, just to kind of really summarise, I think what you've said there, Steve, is the reinstatement cost, which is essentially the rebuild cost, is the key thing here. It's very different to the valuation, and I think for a lot
Yes.
of our listeners, they've got HMOs, they've probably got an element of commercial value to it. That's not your reinstatement cost. It's actually what it would cost to rebuild something in the total loss,
Yeah.
and that's actually the insurable figure. But if you're wrong, not only will you not get, obviously, back enough to pay it, but actually just the fact that you are out on your rebuild cost, the insurance company will you'll effectively be penalised for that as well, and you could walk away with almost very little, really, comparative to the property, the actual true reinstatement value. So it's really important people take this on board. And you've highlighted a few really important issues today, Steve. Thank you for doing that. Thank you for coming on the show to do this. And
appreciate
I
it.
think you've really helped me, even as someone who's been in the game for a long, long time, who probably should have a much better understanding. You've actually helped me understand and see that there's a bit more to this, and I probably do also need to give this a bit more thought. I've got one final question for you,
Yeah.
and I'm not sure I want to know the answer. I think you've certainly already alluded to it, but where should we expect things to go in the next couple of years? Prepare us. I think I'd rather know now than, but are we realistically looking next couple of years sort of 20-30% increases in premiums?
Yeah, I mean, the index linking side of it, I'm hoping, like all of us with the cost of living, that something happens around the world that makes material more affordable, and we get more workers back into the UK. But even if we just said, go for a low figure of, say, 15% for index linking, that's nothing to do with the insurance companies putting the price up. That's just the cost of your property to rebuild. But unfortunately, that 15%, you are paying that premium. And I think then you've got to look at, and we'll probably know more figures probably another year down the line. So last year we had a record number of flooding, and I think what made it worse, they were flood areas or properties that flooded that had never ever flooded before. So the insurance industry wasn't geared up to those additional losses. So the majority of insurance companies on the property side last year lost money. I mean, obviously, for them, and with the cost of claims payments going up, they've got to recoup that money at some point. So I do think, with that in mind, we could see insurance premiums go up by 10, 15, 20% over the next few years if something doesn't change. I was hoping it might steady itself out, but unfortunately what we've also seen, which we've never had, not that I can recall anyway, someone will probably listen to the podcast and say, no, you're wrong, but we've never had sort of wildfires where the heat has obviously set, large grass areas alight. And what we have seen, unfortunately, and touch wood, nobody's been harmed, but I think probably in some areas they would have been, is houses just being burnt to the ground. And that's something that will probably take a year to sort of work out how much of an impact that has had. So we've had two different things over the last couple of years that you wouldn't expect. You expect fires, don't get me wrong. You expect chip pan fires, and they could be £20,000-30,000 worth of damage. You expect floods in certain areas, and there's more terms, higher premiums, and in some cases you can't get the cover. But I don't think anybody expected the fires that we've had this year. So if you look at index linking plus the cost of materials, I don't want to scaremonger, but you could see premiums go up by 20-30%. And with everything else going on, and heating bills and everything else, I appreciate that's not what people want to hear. But I do think it's important when you're budgeting for insurance, you allow for the fact that your rebuild needs to be assessed, and you budget for the amount that, unfortunately, things will go up. I mean, it works the other way. I don't know if whether you remembered in COVID, some insurance companies, I think this was a first, actually give money back to people where car claims had gone down because nobody was going out and about. And a few insurers actually publicised the fact they'd given policyholders refunds, something I've never ever heard of in our industry. So while COVID obviously was good for some things, obviously it then put other costs up, where people were then going back to their home countries, and we lost all that expertise, all that labour, all those professionals, which then means the people that have got the work now can charge more because they've got so much work to be getting through. And I do also feel that it's worth, even if you've not had a claim in the past, making sure you've got contact with local builders and local tradesmen, because in the event that something does happen, you could wait 2-3 months to get it put right to the level that you need it, if you've got nobody in mind. So it's important to have a good network, or if you're using a letting agent, ask the question of a letting agent, have you got a good network of tradespeople in the event of a loss?
Well, you've certainly highlighted some important stuff here for us, Steve. Unfortunately, the answer to the final question wasn't the best news, but I think at the minute, there's not a huge amount of good news coming our way, and I think, our listeners, we need to make sure that we're factoring this in when we're appraising new deals, when we're thinking about buying new properties, when we're refinancing things. And of course, for all of our listeners and members of the HMO community, Steve and his team at Total Landlord Insurance with Hamilton Fraser are powering our insurance service at the HMO Roadmap. So head on over to the HMO Roadmap, and you can actually drop an inquiry with Steve's team. And they're clearly the guys that can help you make sure that you've got the right policy in place. Steve, thank you so much for coming on. Thank you for sharing all of your insights on insurance. And you can hopefully give us an update as and when things change, but hopefully it's as prices start to come back down, because we move into a more positive world. Thank you, Steve.
Brilliant. Thanks for your time, Andy. Thank you.